Well, hello everybody, Michael Silva here. We got ourselves a new month, so we're going to be discussing new expected moves for the month. We're going to talk about seasonality, upcoming earnings. We're going to go into the S&P 500, the NASDAQ, the Russell 2000. We're going to go over some intermarket stuff and, of course, some various indicators in today's Stock Market Brief show. Welcome to the show if you're new here. The show we do Monday through the Friday. If you like this type of stuff, make sure to subscribe and like the channel. We're going to get right into it today, looking at the month-to-date performance. What was the leader? What was the laggards? If you take a look up here, CL, this is energy. WTIC, crude oil, up 15% on the month. So we saw a big bounce there, and no surprise, the top performing sector was energy. XLE was up 7.77%. Then we have copper below. So a lot of cyclical commodities are actually starting to perform very well, which is interesting given the current economic environment with the Federal Reserve trying to bring down inflation. If you take a look at the bottom of the list, you have TLT, who was one of the weaker performers, and then you have Bitcoin down 5%. Now TLT, why would TLT be down? Well, it's because bond yields went up, and we'll get into that to more in the intermarket section. Look at some of those monthly charts. So yeah, the S&P 500 finished right up at its monthly expected move. So we're going to be updating that. You take a look at the Qs. Qs finished within the expected move right there, tagging, getting outside of it slightly, but closing within it. And then IWM was one that finished outside, and we got that PPO, price percent oscillator, starting to curl itself over too. So we're going to give some updated charts with these names. Now, if we take a look at seasonality, this is a chart by Almanac Trader on the Twitter, and these dashed lines here represent pre-election years. We're in a pre-election year, and as you can see, in the month of August, you have trading days down here, 1 to 23, okay? Each day represents one trading day, so it doesn't represent like a Saturday or Sunday. And you can see typically to start off the month of August for the first 4 to 5, 6 trading days, it's not all too hot. And Russell 2000 during pre-election year looks like it gets clobbered the most, where the Russell 1000 has more of the relative strength, as well as the S&P 500 and the Dow Jones Industrial Average. But you can see typically weaker in the month of August to start it off at least. But we do have quite a bit of things going on that we need to be aware of. And that has to do with earnings, right? This week, we have Amazon after the close on Thursday, as well as Apple. We also have various other names in here. We have before the open tomorrow, you got Uber, Caterpillar, right? We have after the close, we have names like Starbucks, Pinterest, MicroStrategy, and so forth. So a lot of names reporting earnings. Last week was a big week for earnings. This week is going to be a big week as well, which can just really increase the amount of volatility we see. I'll be showing a chart of Apple here very soon in the NASDAQ 100 section. If we take a look at what's on the docket for the macro data calendar, what you'll see here is we do have actually an important week. Right down here on Friday is going to be a big one, where you have the unemployment rate and non-farm payrolls coming out 1 hour before the market opens. So just be aware of that. Tomorrow, we have ISM manufacturing and JOLTS data about 30 minutes after the market opens. So if you're trading intraday, right, 30 minutes into it, just be aware that when these kind of reports hit, it could create more volatility and more whipsaws in the market. So you just want to have that time stamped on your specific chart that you're looking at, just so you're aware. If we take a look at the S&P 500, we're going to update you on the new monthly expected moves. So the dashed line is actually the quarterly expected move, and the monthly expected move is basically in line with that as it stands right now. Okay, so the upper monthly expected move is 4733. The lower is 4,444. I'm just going to round it there. If we come up and tag this, just understand that that's where the quarterly move is. That's right around the all-time highs, and the monthly, which is, it's not too far from that. So it looks like the market wants to bring it there. Will it be a straight shot? Well, we have to really look on an intraday perspective or a daily perspective on other time frames to really get a good glimpse of that. Now, if you're unaware of what these expected moves are, just understand that 68% of the times we look at these as probabilities, 68% of the time it closes within those expected moves, and very likely to tag one of them as we've been seeing from a monthly perspective, quarterly perspective, weekly perspective, daily perspective, and so forth. So if I look at the daily chart, yes, we've been on a monster run up, okay, and it's just a series of higher lows, boom, boom, boom. So the trend is up and higher highs. So the trend still remains up at this point. Now, we talked about this bearish engulfing on the last trading video that we put together. We still have that negative divergence. If I zoom in, you'll see that we still actually are trading within that bearish engulfing candle. So just be aware that, hey, like we discussed, on this big red day, we're likely to see some sort of a bounce. That's totally normal, but the levels that you really want to pay attention to is if it starts breaking down from this, or if we start recapturing the high of that to invalidate that bearish engulfing candle. These mean nothing without that confirmation. If we get into the 15-minute time frame, today was a very choppy, boring trading day, right, to end the month. However, you can see we had that little end of month markup right there into the close, that big 15-minute candle. Just look at this purple line. This purple line is the 5-day moving average on the 15-minute time frame. So if you want to add this on your chart on the 15-minute time frame, you use the 130 period SMA, okay? And what you'll see here is they do not want this to be broken down for much at any point. And you can see it held today and it held today. So the 5-day moving average is currently holding. So when this trends up, this just tells me as long as price action is above it, it equals bullish. As price gets below it, you want to be more cautious, and it depends on the trend of it. So if it's down below, but the trend is still up, right? It's bullish, but proceed with caution. Okay, and then if it starts to flatten out, that's more of a neutral trend. So if price is above it, just be aware that, hey, you want to see this start to turn back up again like it's doing actually right now. And if it's trending down and the price is below it, okay, that's more bearish, and it's confirmed to be bearish as price is below it. Now, if it's trading down and price is above it, you want to be bearish, but with caution, okay, because just like the 4 stages of market structure, you have stage 1 is accumulation, stage 2 is the markup phase, stage 3 is the distribution, stage 4 is the decline, and then we go back into stage 1, accumulation. And it's the same thing. That's what you look for in this moving average. So as it stands right now, we're in the markup phase still. But if it starts to flatten out, okay, that's going to potentially be the accumulation or the distribution phase. Could be just a pause before we continue moving up. But if it starts curling back over, you just want to be aware that you don't want to get caught going long or being long while the chart is in decline. Now, if we take a look at the daily expected move, 460.03 for the upper daily expected move, 455.55 for the downside. Then we have the lower weekly. I'm at 451 and the upper weekly at 462. Earlier in the trading session, this is kind of what I was looking at. So we had this potential, inverse head and shoulder type pattern, looking for a breakout of it. And if it breaks out, to hold as a potential area of support. And you can see it broke out, but we just kind of just doodled around it all day, pulled into the 5-day, and then we started breaking through it. So as it stands right now, if I were to just look at this and redraw this out, like so, we'll just say it's like this. As long as it's going to hold up into this area, that's going to at least open the door for that 460 tag. Yeah, we might run into some resistance along the way. That's totally reasonable. But as long as we're seeing a series of higher highs and higher lows, you can play, and then you can have strategic stops beneath key levels. If we start getting down below this, just understand the lower daily is at 455, and we'd be right there around that 5-day moving average. So really what that would look like is more just neutral trade at the time, which means that the 5-day could potentially start flattening out more. So yeah, if it gets down here, I think that there's still going to be intraday trades for potentially long. If we start breaking down and the 5-day holds as resistance, then obviously be more cautious. NASDAQ 100, if we update this, we have 401.37 for the upper monthly expected move, and then the lower monthly is 365.99. Okay, we haven't actually reconnected with the monthly 5 EMA. Remember, this is the most frequently tagged right here is the monthly 5 EMA. And if we stay disconnected it for quite some time, we typically get snapbacks at some point. So as this moves up next month, as the new candle forms, potentially look to see if that reconnects at some point. And if it does, remember it's still trending up, which means the trend is still obviously bullish. Now there's a couple big names within the NASDAQ 100 that I want to really quickly go over that hold a heavy weight, not only for the NASDAQ, but also for the S&P 500. And that's going to be Microsoft that I want to go over first. And I just want to call out, we do have a pretty large shooting star type candle. The last time we had this on the monthly time frame after a run up was the start of the bear market. And what I found interesting here was if you just take a marker from the low of this shooting star candle. It actually lines up with the low of this shooting star candle. And what you can see is once we had a monthly close beneath it, it started the bear market kind of moving to the downside. So if we do for some reason get a monthly close below this and it starts breaking down further, you can anchor a volume weighted average to the low here, and as this starts pulling up, this could be potentially an area of potential support as if this were to come back down. And even if it were to come back down and so forth, this could just be a larger cup with handle type pattern where it breaks out into the near future if you are still bullish. But just be aware that, hey, if we start breaking down, that can put weight on obviously the Qs and the S&P 500. Another one is Tesla. If we just draw a ray line basically from the top to this, it connects all these areas. So this is obviously a trend that's been holding as resistance. So to be more bullish, you'd want to get outside of that and break. So if this just consolidates more sideways, that would actually be incredibly bullish, especially if we start breaking from that level to come retest these prior all-time highs. But as it stands now, if we start breaking down below it, just be aware that it might need some more time to digest on these larger, time frames. I'm going to show you Apple on the daily time frame. This obviously has a big weight too. It's the largest market cap stock. You could see on the daily time frame there is this algorithmic type trend. It's just a very shallow pullbacks, and it keeps moving up. And we're still trading within that bearish engulfing candle the last time we talked about it. Remember, if it doesn't confirm it to the downside, it means nothing. And if it doesn't break it, it doesn't cancel it out. So right now we're just trading within those candles. So if we start breaking out, that'd be a more bullish sign. We do have earnings, and earnings can be quite tricky. So just be aware of that coming up here on, I believe it was Thursday. So if we start breaking beneath the trend, I'd say, be a little bit more cautious. That's when we might see more volatility. I've seen many trend breaks where it breaks down, people get all excited, then it comes back up, and then people are like, aha, it's back. But it's really just back testing, and then it goes through this distribution phase, okay? And it could throw a lot of people off. But just be aware that it is a very, sharp trend, and eventually it's going to have to go through a longer period of digestion. When that is, we don't quite know. So you can play, more tactically in the meantime. Or if you're a long-term investor, it doesn't really matter, right, to longer-term investors. Okay, if we take a look at the Qs on the daily time frame, you can also see we're still, a series of higher lows and higher highs. We do have that negative divergence, and since that negative divergence started playing out, we're just kind of chopping back and forth at this current moment. So if we were to see some of these bigger names start to break down, it's going to put weight obviously on the NASDAQ 100, where it might need to digest a little bit further before potentially going to tag out that 408.71, which is the all-time high, which is roughly around where the upper quarterly and upper monthly expected move is. Now, if we look at the 15-minute time frame, here's the level that I'm watching is this 384, basically 50. What you'll see here is this type of inverse head and shoulders, very similar to the SPY, but you can see it acted as resistance today, resistance, and then that last 15-minute candle, we started blowing through it. So if we can get above that, I think that at least opens the door to the upper daily, and if we can really hold that and it maybe potentially breaks it, acts as support, maybe adds in a better risk to reward trade to play up to the upper weekly expected move. We're above the 5-day moving average. The 5-day moving average is trending up, but remember, it was up there, it was down, now it's up here. So really, right now as it stands, it's actually more neutral than anything. So we'd want to see this start to pick back up and price to hold above it and see once again a series of those higher highs, higher lows while it's breaking these areas of resistance. You can see the quarter to date anchored VWAP. Look at how accurate this held. So the bulls did not want to give this up. My guess is if it gives it up, that could create some sort of a flush. So just be aware if price were to come down into these levels. This is the lower weekly is 376.11. Lower quarterly expected move is right down here too. So this can act as an area of support. Just remember, if it starts breaking down from these levels, it could get a little crazy because sentiment shifts heavily. And if you don't know what I mean by that, well, I talk about that in some prior videos. So we'll talk about that more on other videos in the future, or you can go back and watch the prior videos. Let's go to the Russell 2000. The Russell 2000 had its first monthly close above the all-time high anchored VWAP. Okay, so that's actually a bullish sign so far. It doesn't mean that it can't pull back and digest. That's what many stocks do and what many ETFs do. And if that's the case, as long as we can hold that all-time high, anchored VWAP, that actually presents itself a great opportunity to potentially go higher. We're not too far off of 200. Looks like price wants to at least go and test that. You can see over here, we've been trading for the longest period outside of the all-time high anchored VWAP. This is the daily time frame. We had this bearish engulfing candle, and then price broke through that to the upside today, as we saw a lot of stocks, heavy short interest stocks, kind of getting squeezed. But also remember, oil's been going up, which is good because there's a lot of small cap energy names in the Russell 2000, and there's also a lot of financial names, and financials did pretty well there too as well, which really obviously helps the Russell 2000. So if that's going to be the case, and we're going to be seeing some rotation maybe out of the big tech names, and they're going to take a little bit of a breather, this could be a potential opportunity. So look for potential pullbacks, look for consolidation, and then you could play potential breakouts for further to the upside. Let's look at the intermarket, some intermarket things. A big one is going to be the dollar. So I brought up the monthly chart of the dollar because the dollar broke down pretty much in October of last year when the stock market found its bottom. And I just wanted to, call that out because when the dollar heads down, many other things typically go up. There's a lot of negative correlations with the dollar, and one being the S&P 500, which I'll show you here soon. So if the dollar is going to hold this 100 area, this level, which was prior resistance, if it's going to hold it and potentially start moving back up, that can actually add some pressure into equity markets. So we're going to want to be aware of that. But if we start breaking back down, maybe through 100, back to 94, it might create some more of a melt up type movement in the overall stock market and various assets like potentially gold, which I'll show you an updated chart there too as well. But if I show you the daily time frame, we're still actually kind of following this trend line down. It's holding as a level of resistance. So perhaps this little shakeout right here, right, or this breakdown, now we're starting to just kind of a reflexive dead cat bounce potentially, and it's just coming to back test this trend line. But if it does start to base out and break out of this, that could be a pretty positive sign, obviously, for the dollar, negative sign for potentially the S&P 500. As you can see, back in October, we found its high. Back in October, we found its low. This went down. This went up. Now, I will say, in the near term, what I find interesting, the dollar's been moving up. The S&P 500 has been moving up. So something is a little off here. Is it the dollar, or is this going to potentially break here in the near future? And if it is going to break, what's going to be bringing it down? And that's why we went over some of those heavy tech names, because those tech names can hold a lot of weight. Apple, obviously the biggest holding, and what you'd want to watch for from a more tactical perspective, obviously with Apple, would be that trend break, or Microsoft potentially breaking as a follow through, breaking down from the shooting star. That would be more negative for the market. Okay. Now, if we take a look at oil, you can see as the dollar's been going up, oil has actually been going up. So there's actually a positive correlation there. So if the dollar starts breaking down, perhaps these names could catch even more of a move too, because we've typically seen negative correlations, but recently it's been quite positive. RSI is moving into that overbought territory. The last time we were there was right over here. So, and then we took a little bit of a backseat breather. If oil starts coming back down and backing off after this big run up, I would imagine energy stocks can take a little bit of a backseat breather too. And the reason why I'm telling you this is because the IWM's been on a big run, and if those start to take a backseat, if oil or energy stocks take a backseat, maybe this needs some more time to digest too, which could create buy the dip opportunities if we see a strength after that dip. Okay, if we take a look at gold. Gold's still doing well. Like today, we closed up at around just over 2,000, right? So we got back above 2,000. We've been talking about this wedge breakout. We talked about the possibility for this being an inverse head and shoulders. That can potentially go swing right back up to this high. The dollar is starting to correlate with gold. So if the dollar breaks down for some reason, that could be very good for gold. But as it stands right now, the correlation is actually positive, which is also, just different than what we've been used to seeing. If we take a look at copper, copper's also seeing some strength. So another, economic type metal doing good. So 6.61% up for the month. It could very well potentially be flagging. So if this starts breaking out, hey, we might go retest that $5 area right there. So that's going to be one to watch. If I take a look at the 10-year yield, the 10-year yield broke. Obviously, this is on the monthly time frame. We got we broke out of here, and then we've been kind of consolidating, which we've been talking about. I show you the daily time frame, how we broke out, we back tested, and now after this large day right here, that was on the Bank of Japan news, we've actually been kind of just trotting sideways here. So is this just taking a little bit of a breather potentially before going to retest this high or the prior swing high at around 4.3%? And remember, like I've been saying, if names like Microsoft gets taken down or goes into, breathing, or Apple gets hit, well, what would potentially amplify a move on those assets to get hit could be a rapid rise in the 10-year yield. If the 10-year yield starts to move at a faster, rapid rate of change to the upside, that puts pressure on heavy growth names. So that's just another thing to potentially pay attention to. If we take a look at some stock market indicators, the BP-SPX chart is moving out of overbought conditions, but the S&P 500 is still floating around the high for 2023. It's really when it starts crossing down through the 70 marker. Okay, I'll show you. If I go like this, when it gets above it and then crosses below it, you can see that's when we saw weakness. That's when we saw weakness. That's when we saw weakness. That's when we saw some weakness. That's when we saw some weakness, and we're still well above it. So if we start crossing down through 70, maybe pump the brakes a little bit, and we'll revisit it. If you take a look at the BPCOMPQ, this is still a negative divergence forming as it stands right now. So just understand that, growth names, a little bit overbought according to the RSI on the bullish percent index. Bullish percent index for the New York Stock Exchange still hanging out here in the overbought condition there too as well. If I take a look at the summation index, the parabolic star is still in bullish context with the summation index still above it. There's a little bit of a negative divergence on the breadth of the market as it stands right now, but we're still had that potential change in trend, and it started moving up, right? So what you want to watch for is a potential parabolic star upticking through this, and this is start turning around, which could identify a potential change in trend for the NASDAQ composite. Summation index for the NYSE, you can see also still holding as the market's still holding. And as we pointed out prior, we do have that negative divergence there in breadth. This broke down, it's starting to come back up and back test it, but it's still a negative divergence. So if this goes up and we can't retake out this high, the divergence would still be building at that point. One indicator that I haven't talked about in a while is built by the Old Fool indicator. And this is basically looking at a ratio line of the NASDAQ composite over the put to call ratio. And then you apply two EMAs, the 21 and the 50. And when you see the 21 cross above the blue line, which is the 50 EMA, it's a bullish signal. So the last time we actually really saw the bullish signal was kind of spread right here. And you could see price kind of went sideways. But that was the last buy signal, and we saw a nice big move. If I go and I look and I show you a bunch of different buy and sell signals on this chart, you'll see that there could be a lot of whipsaws, but it's been very good at finding potential trend changes. So as this, was a sell signal over here, that was the COVID crash, right? It went down further, went down, and then we got the buy signal, right around this level, which created a nice big move to the upside, had a couple, sell signals there, and then you saw the buy signal right there. This was a sell signal that caught this big one, a sell signal that caught this one. Then the last buy signal was this one right here. So the reason why I'm showing you that is because, it's a nice spread between the two. It's still on a buy signal. So if this does, for some reason, start crossing back over in the future, it might be worth paying attention to, which is why, if you haven't subscribed already, make sure to do so, because I will be updating you with this chart as time progresses. That's all I got for you on today's episode, everybody. Have a wonderful night.